All right, morning everyone. Okay, so we got going on with the market continuing on its downtrend basically from our start from the 19th. We are down at an old print level that came in by a couple months back whenever we were on our run up. We are starting to base off of that level. We're also at the 88% pullback from the run up from October the 3rd. If we come down and start breaking through these prints and start sliding further down, 284.82 will be a 100% gap fill off of that run. So that will give us a flushing at this point to look at it for pulling down to 272.27. Now why I say 222.27 is if we go back even further, we go back to that big drop that we had back in let's pull it back on the huge large chart here, way back here, back from when we had that nice dramatic drop and we had the rally right around Christmas of 18. Well, if we get back to that point in time, then we start going and look at where we're currently trading today. A pullback at 272.27 would be a 61% pullback. So we do have odds of hitting this area if we wind up breaking through the 100% barrier off of the recent run up, the recent impulse leg that we have that we're now currently retracing on back from October. So this will be more or less the panic area. So we'll get that drop, should get some basing in this area. We have seen a huge buildup coming in yesterday over here around the 311.5 level. Massive amounts of prints coming through compared to what we normally would see coming into the dark pool network. This area here is going to be more or less our roof, is what it looks like. So any type of bounce that we have potentially pushing up, 311.50 is going to be one hell of a feat to get through at this point until we start seeing them coming in and start taking their profits and we start seeing them giving us a basing. There has been very little traffic of late prints coming through. Late prints is usually the identification that we get to show that they're starting to reverse it. That's what we started seeing coming in back last Friday, as we started seeing on Thursday. They were doing their transmissions last Thursday, and Friday we started getting the prints coming through of what they were doing, and that was basically where we had the sell-off starting to go through the weekend. So until we start seeing those prints start flowing through, we basically can't say that this is the bottom at this point. We are at areas that we should massively slow down. I would love to start seeing a little bit of a bounce here. I'd like to start seeing some harmonics down here on an intraday level being said. But if we start breaking down these lower levels in here, we could still have a snap flush. And a whole week of this, going into the weekend, I mean, the panic people are going to look at wanting to just bail out, bail out, bail out. I could see the institutions coming in here and actually saying, hey, now we got them all scared, let's come in here and dip bite and pop it up to at least 311. This could be a very plausible case that could be happening here. I mean, they're the casino and we're just the customer, so it could be a very easy setup for them to be able to make a lot of cash off of, panic selling off over here. Good dip buying opportunities. I'm not saying this is a dip buying opportunity yet. It is not a dip buying opportunity until we start seeing where they're going to take this down to. Right now, we don't see a floor. This is just a major support based off of, some Fed numbers back from, going all the way back to 18. So I don't really foresee us breaking this area here. I think this will be a major support area off of it because that is usually a respected zone off of it. If we break through that, I mean, we're going to have a serious problem in our economy and stuff. So look for this ranging area. I want to see some basing off of here. I'd like to see a little bit of a gap at the open and then look for a little bit more of a potential pullback off of that. Okay, Workday. We have a decent beat on their EPS, and we have a beat in their revenue. Do not have a guidance yet off of it. Usually it comes in the conference call. I don't have a time on the conference, so we'll look up the calendar and see if they're doing it in the middle of the day. But we basically have a neutral play after hours. We don't have much of a bounce. We do have positive on their current report, so we really need the guidance to see if we're going to be able to get anything out of it. Workday does usually follow the SPY to a certain degree, but because it has its own catalyst today, that could help it out. If we get any type of bounce, then Workday should give us the positive bounce, borrowing that they don't have any type of negative guidance coming through here. And there is a possibility we can get negative guidance just because of the virus coming in off of them. WWAY, we have a really good a really good miss on their EPS, and we are just in line revenue. Do not have guidance on this one either. Basically, we're coming down to a bounce zone over here at 57.27. Start looking for a little bit of a curl and a gap fill off of it. Like to see more or less a dead cat bounce, but we do need guidance off of this to confirm that they're going to do worse on the next quarter. Being that they're kind of basically just like another Amazon type thing. You could probably see this thing is probably coming down because probably a lot of the goods that are sold in there are coming from China. Dell, we're just in line on our EPS, in line in our revenue, and they're announcing a $1 billion repurchase. Okay, that's good. That kind of helps bring it back up normally whenever we have a bleeding off, because there's nothing spectacular about this. Their guidance into next year is not so hot either. Dell usually does not really play so well on it, and when it really comes down to it, the stock that I would prefer to go to when it comes to playing Dell is VMWARE, and they reported the exact same day too, because VMWARE basically is Dell. I mean, Dell owns, the biggest chunk of VMWARE, and so this is usually the better play. You got more range inside of it than you do with Dell. And they pretty much are kind of usually about the same when it comes to how they play out. They did miss also on their EPS. They did beat on revenues, which did more or less help out some. But they're going to do their guidance in their conference call, which doesn't look like they've had it, or they may be into it right now. We've got some selling off. This more or less kind of algos since we've woke up this morning. We had the nice drop off the media announcement. Start looking for this thing to start basing down here soon, and then look for a dip buying opportunity for a scalp. Play the price action in general, because they come out with negative guidance. This thing can slip down to at least 120 off of the way it's heading down at this current point. But this will be the one that's going to give you the most volatility between the two, and you basically are playing Dell at this point anyway. TTD, we've got a huge beat on their EPS. They beat in revenues, and we have a revenue going into the next quarter is going to be above, so this is good, and also going into next year, so pretty much positive across the board. They didn't say anything about the EPSs on the guidance side of it, but being said, it does look like they were going to have a positive outlook for them in general. We've pretty much had a lot of choppiness in the pre-market. Look for this thing to kind of give us a good basing down here about 255, between 260 and 255 area, and look for a dip buy, an opportunity for a continuation push up, and basically just kind of holding on to this trend that we've kind of started developing right here. Look for that more or less for a continuation push. This thing's got hell of a range in it, so if you're a newer trader, you may want to avoid it, because I'm giving it a 5-point leeway, because this stock moves usually about $3 per minute at given times when it starts having some serious volatility. So make sure that you're sizing in according to how this stock can move. This is basically just like playing with Tesla, guys. When Tesla was, before it was up to its high, all-time high levels in the recent weeks. This thing does have some serious movements that can happen into it. It can seriously make you some money, but at the same time, if you're on the wrong side of it, it can hurt hard. Just more or less, just look for more of a push up here. 275 will be a tough area for it to try to break through. This stock does have issues with about every $25 increment areas of slowing down a little bit and having to kind of prove itself. It wants to get over these hurdles and stuff, but this is definitely one that we want to be looking at for volatility today, and primarily on the upside, especially if we get a market bounce off of it. Foot Locker, we've got a light beat on EPS, and we've got inline on their revenue. Their comp sales up 1.6. Really, that's, I mean, you're up, but it's less than 2%. That's not very impressive. So I look at this as more or less a neutral type earnings report than it would actually be a quality one, because there's nothing that is exciting about what's happening here. Look for more or less, we've had the drop, we pulled back, we're kind of at that point where we're going to start getting that heaviness to it. Just look for this thing to start kind of bleeding back down, to come down to these pre-market low levels over here. Foot Locker has a tendency of trending down early on in the morning and stuff, and then it will start kind of flatlining going into the later afternoon on its earnings on it. So try to catch as much of the move in the first 90 minutes stuff. They also usually do their conferences during the day if they haven't already had one yet. Beyond. Okay, Beyond, we've got a light miss on their EPS. We beat on their revenues, and they're guiding inline into next year. Wow, that's not very impressive. Basically, they're just saying they're going nowhere. Well, this is why the analysts have all given it pretty much a neutral positions on their ratings and stuff, because Beyond, there's nothing impressive about it other than the popularity of the name right now. So we had the sell-off going through last night. We are coming down to some areas of some respect. We should start seeing some basing here off of the 87 level. But the key thing is we start breaking this, we're going to come down to a lower level of 81. And so I just don't really feel that Beyond has got the energy off this report to really start reclaiming above the 100 at this point. So just start looking for a pullback to about 81. That would be a good actual dip buying opportunity to kind of push it up. You can see it push back up to these levels that we've kind of hit in pre-market up here to about 97. So there is going to be some range to play with this stock today. It's just don't get this crazy notion that this is a major dip buy. This is more or less just a scalp opportunity. This is not a swing dip buy opportunity at this point yet. Big Lots missed their EPS pretty big. They missed their revenues. Their comp sales are negative, not major negative, but I mean they're still below expectations. And we are guiding next quarter lower across the board. We're guiding next year lower across the board. Can I say anything more negative about this company? I mean, this is other than maybe they're still in business. All right, so let's go with more or less. They've got they're seeing the slowdown in stores, future store rollouts. They're not looking at expanding. Does this sound like you would want to invest in this stock? I mean, this almost sounds like another Bed Bath Beyond. All right, so this thing's dropping. Look at more or less a little bit of a curl at the open, and then look for it to start bleeding back off. $15, I think we're going to have a little bit of a key area to start kind of playing around it. Look for it 15, more or less the line in the sand over, kind of scalp it on the upside when you start breaking down below 15 and start taking her back down. I don't think you're going to get massive range out of it because it has already dropped quite a bit overnight. But so we'll probably start seeing some stabilization and sideways action with it. But there's nothing good about what they reported. Pure Storage, PSTG. We've got a light beat. Might as well just call it a neutral on their EPS. They are in line in their revenue, and we are guiding lower across the board between next quarter and next year. Nothing positive here. Flat basically on earnings, and they're telling us they're not going to do any better. So same thing. Pretty much looking for this thing to start bleeding down. $15 once again is a key area here. We got a couple good $15 plays on it. This one's not going to be probably as active as Big Lots is, but it gets moving around usually at the open, then it starts settling down and becomes kind of somewhat neutral usually when it does its reports. BIDU, BIDU, we've got a huge beat on their EPS. Unless I got a misprint here, that's a massive beat. I gotta double check that's huge. And then we got a beat on our revenue, but we're pulling back down. I do not have guidance on this one here. This is a Chinese-based stock also, so we need to go in here and start researching and see if we got a guidance coming out in this one on it. And I need to double check that. I just pasted this from my news services, and that's a crazy number on their EPS. So more or less play the price action with this one. I'll just get back in the chat and reconfirm exactly what I'm seeing on this one off of that, because that's a crazy line there. And we've got ALT. They have a nice little announcement saying that they have they're getting some positive results off of a vaccine for the coronavirus. Okay. It's just in developmental stages. This isn't met primary endpoint. This isn't FDA approval. This is more or less just positive results of a report that says that things are in favor. Okay, normally these are pop and fades. Normally we just say, okay, let it pop, let the retailers get into it, let it pull back on them, and it pulls back and just neutralizes itself. This, being that this is connected to the coronavirus, this is a different type of play. You need to play the price action with it. This thing can have and has the ability to move up because of the report continuing going. Not saying that it will, but I'm basically saying that don't expect necessarily a automatic pop and drop that we would normally see out of it, just because this thing's connected to that virus. So this thing has ability, because of its float size, to start taking off if we get enough retail, chat rooms, and everything else jumping into this thing. So pay attention to it, put it on your side charts, look for dip buys off of it. Don't get married to stocks like this. Don't hold this thing over the weekend, because it starts moving up with this type of announcement. I smell an offering coming, guys. So don't get married to this stock when it comes to that type of a news. Basically Autodesk, ADSK. We've got light beat on EPS. We got inline revenue, and we are guiding next quarter lower across the board, and we are going to just be in line next year. Okay. I'm not impressed. They basically, their beat was so light on their EPS, was basically just must call it inline. So basically neutral earnings this time. We're going to do worse next quarter, and we're just going to kind of flatline in the next year. Not positive at all. Dead cat bounce. Look for this thing to start bleeding off a little bit more. This 175 needs to be kind of our line in the sand for it, and look for more pullback retest those lower levels that we had earlier this morning or late last night. Oh, and here's a real fun one here, guys. CHK. Why am I bringing this up? You know me. I don't play stocks under $1. I like stocks $1 and higher. Okay. And, you know, primarily $100 is where I play, $100 to $500. But I mean, I'll play a dollar stock any day of the week if I see a good reason and catalyst. This one here is a freaking joke. This one's really funny. I had to put this in here just for y'all for some entertainment purposes here. We've got an analyst that has reduced from a neutral play to a sell rating. So they're saying sell it. They have basically had their old price target at $1, and now they have given the new price target at 0. So you don't see this very often, but we got analysts saying this thing's going to 0. So this is really funny to see that the analysts can do these type of things sometimes on that. So I just threw this in here for more or less entertainment purposes, because it's, I mean, that is a joke. But at the same time, it is probably going to 0. So there it is. Y'all guys have a great morning. Play safe. You want to talk, we're inside the Discord chat voice. And y'all guys have a great morning.